at the moment, we're simply not competing in China. Now, what's going on? We have conceded, essentially, the second largest AI market, the second largest technology market in the world. We said if United States was not in China, China's AI industry would be set back.
Yeah.
Absolutely has not happened. As a result, their semiconductor industry has double. You know, the semiconductor industry in the West, around the world, is growing at 20-30% per year. Growing 20-30% per year compounded versus doubling every year compounded doesn't take long to catch up.
NVIDIA's Jensen Huang yesterday sounding off on AI competition between the U.S. and China in that fireside chat hosted by the Center for Strategic and International Studies. Our next guest was there in the room and joins us with some takeaways. Here joining us at Post 9 this morning is Gregory Allen, Senior Advisor of the Wadhwani AI Center at CSIS. It's great to have you in. Thanks for joining us.
Great to be here.
You make the point that this was a very specific audience that Jensen was talking to, yes?
When you speak at CSIS, you are speaking to the national security and foreign policy establishment of the United States. John Hamre, our CEO, who conducted the interview, used to be the Deputy Secretary of Defense, and we're very well respected in that community.
So when Jensen now says, I don't even know if there'd be uptake for H200s, is he saying it because the Chinese have moved on, or it's just too exhausting trying to wrangle the China hawks back home?
So what Jensen wants is to be able to sell these more advanced chips, the H200s. And right now, there's different constituencies in China. If you talk to any of the leading Chinese AI companies, Tencent, Baidu, Alibaba, they would love to buy those chips, as many as they possibly can. But then you've got companies like Huawei, which are designing their own competing chips, and they don't want these sales to go forward. So it's really about who do you want to help by selling, who do you want to hurt by not selling. And in this regard, Jensen is basically saying, let us sell the chips. Now, the Chinese have banned the less advanced H20 chips, which the Trump administration originally banned the export of and then released that ban. So that's what he's talking about there. But everything that I'm hearing from folks on the ground in China is that that is a negotiating tactic. They are basically saying, we don't want your less good chips. If you want our tens of billions of dollars in revenue, it needs to be these high quality advanced chips.
Yeah, they were apparently insulted when Commerce Secretary Lutnick said that they were their less good chips. So which is the better strategy from a national security perspective? Is it to sell them the chips that Jensen wants to sell them, or is it to not?
I think it's obviously to not, and let me explain why. So his point is that we would be conceding the Chinese market, and I think there's really some historical context that needs to be here. NVIDIA's position in China is not being hurt by export controls, it's being protected by export controls. It exists because of export controls. China in 2020 had a policy called the 352 plan, which was to get their entire economy off of advanced U.S. semiconductor technology. Huawei was going to introduce a 7-nanometer AI accelerator before NVIDIA, but manufactured at TSMC. It was export controls during the first Trump administration that restricted Huawei's access to TSMC, the contract manufacturer in Taiwan, and also restricted the sale of advanced semiconductor manufacturing equipment to China. If that hadn't gone forward, Huawei would be a vastly stronger competitor facing NVIDIA right now.
But so you don't buy the argument that better off that they should build it on our stack instead of go build it on their own in a more advanced way and one that's more of a black box to us?
So I would say the Chinese government policy of indigenization and self-reliance is decades old. They are absolutely committed to this strategy. So they have said in policy and with investments totaling hundreds of billions of dollars that they don't want a future that includes us. And the question is, what should we do in the meantime? Should we help them build the future, build the bridge to the future that doesn't include us, or should we make that as expensive and complicated as possible? Keep in mind, we're competing for global market share in AI. Who is Anthropic or OpenAI or Google or AWS going to be competing with in Africa, in Europe, in Latin America? If you sell a lot of NVIDIA chips to China right now, they're going to be competing with much, much stronger Chinese competitors. So this is an opportunity for us to take advantage of our leadership in AI models, take advantage of our leadership in AI chips, and to build a really strong position around the world during this critical moment for AI adoption. adoption and innovation.
Is his influence on the rise or waning, at least in D.C. or among the national security community right now?
Right now, I would say it's waning. If you look at what was happening a few months ago and over the past few months, there's been a few remarks that Jensen has made that have really been extremely controversial in Washington, D.C. The first of which is he said that being a China hawk is a badge of shame,
yes,
meaning taking China as a serious national security threat is a badge of shame. A lot of folks in Congress, congressional Republicans, conservative media types, really were against that.
So he kind of had to go down yesterday.
Exactly.
Yeah.
He was walking back that remark. He was also walking back a remark about saying that China is going to win the AI race, which again was very controversial. But
it sounds like you'd still totally disagree with him.
So I would say that China is an incredibly formidable competitor, and U.S. victory is by no means guaranteed. And if we're in a race, I do not want NVIDIA giving Gatorade and Nike shoes to Chinese companies and to the Chinese military, which in a recent review of Chinese military procurement documents, they are still screaming for NVIDIA chips to build their military AI systems on.
His comments about China being ahead weren't they largely about energy costs and regulation?
Yes, so that's how he explained that comment.
Right.
He had specifically said to the Financial Times, China will win the AI race.
Yes.
In this interview, he sort of unpacked that more and said, really where China stands out as an advantage is in energy. But I want to make one thing very clear. These export controls have been in place for several years now. If you look at the largest AI data center clusters, by the end of next year, we're going to have clusters that are using 1 million NVIDIA chips and using gigawatts of electricity. All of the biggest AI data centers in the world are in America right now. And if these export controls hadn't been in place over the past few years, I feel confident in saying the largest data center today would already be in China. And the best Chinese AI model developers still, as recently as the past few weeks, say that the greatest challenge they face is these chip export controls.
So that's your opinion, right? So what do you think the administration is ultimately going to do here?
So the administration has basically been more sympathetic to the NVIDIA argument than the Biden administration by a wide margin. You saw that Donald Trump personally overrule the prior decision of his administration by allowing these H20 chip exports. But now NVIDIA is saying that's not enough. We need you to legalize Blackwells. But according to the best reporting available, there was very strong pushback from inside the Trump administration coming from Secretary of State Marco Rubio, who was a very staunch China hawk during his time in Congress, as well as Secretary of Commerce Howard Lutnick and the U.S. Trade Representative. So Donald Trump ultimately made the decision that they're not going to sell the most advanced NVIDIA chips, the Blackwells. Now NVIDIA is saying, can we at least sell the most advanced version of the last generation of chips, the Hoppers, and that's the debate we're having this week. That's what I was testifying before the Senate Foreign Relations Committee on earlier this week. It's a very fierce debate going on right now.
And you say no. You don't want to sell.
Absolutely not. As I said, you're building a future
you're all for export controls
that China has already said is not going to include the United States. They're not going to accept dependency. The question is, should we make it convenient for them to get off of our technology, or should we make it inconvenient and painful?
Right. And of course, huge implications for the earnings model that the street's trying to put together for NVIDIA going forward. Gregory, thank you. Good discussion. Gregory Allen.
Welcome back. The odds for a rate cut at next week's meeting, now 90%, according to the bond market. But our next guest says the Fed should not be cutting. Joining us here is former CEA Chair Jason Furman, who is now a professor at Harvard Kennedy School, was in the Obama administration. It's great to have you, Jason. Welcome.
Great to be with you.
You do not think the Fed should be cutting?
Yeah, so first of all, I don't disagree. They are going to cut next week. But they have a dual mandate. They are about 1/10 of a percentage point away from where they're supposed to be on the unemployment rate. They're 1 percentage point away from where they're supposed to be on the inflation rate. Inflation needs to be their main concern. And moreover, we have a lot of other sources of demand, a rising stock market, fiscal expansion, IT, data center expansion. They don't need to be giving more gas to this economy.
But we have a lopsided economy. If you look at places where rate cuts would actually help, housing, for instance, manufacturing, they've been weak and in contraction. And then there's this whole K-shaped economy. They don't want to be seen as if they're making only policy for the rich in the AI world.
Look, we absolutely have a very uneven set of economic growth. It's very concentrated in data centers. Housing's being hit. I don't like that pattern of growth. But the Fed can't get us out of that pattern of growth when inflation is above trend. The only thing that can is relaxing on things like the tariffs. That can bring down inflation, help the economy, and put the Fed in a better position to support balanced growth. But until we get rid of those, we need to worry about inflation.
Why do you think the inflation is stuck at 3% here? It's not all tariffs.
Yeah, I think some of it is tariffs, and that part will probably go away, although I'm worried about inflation expectations, but probably go away. The other part is I think the last mile is just harder. That's what some of us were worried about. We're continuing to see wage growth that's pretty strong. Even in the weak ADP jobs numbers this week, the wage growth component of it was pretty strong. Non-housing service inflation is high. That's just been hard to get out of the system as wages go to prices, prices go to wages.
I wonder what you make of, I mean, we talk about the impact of tariffs all the time on prices, but this ADP number for firms with 20 to 50 employees, losing jobs for 6 out of 7 months, just the complexity of understanding the tariff structure seems like it's just not in the realm of the ability of small business to handle.
Yeah, I talked to one large business that was very affected by the tariffs, and I said, oh, you must hate them. And they said, oh, no. All our competitors are having a much harder time with them than we are, so it's great for us. And as an economist, that's what you hate to hear. You like competition, you like a level playing field, and something that makes it easier for some companies, harder for others, that's especially bad.
Right, but when it comes to sort of the inflationary impact of it, I don't know, do you think that the Fed remaining restrictive at a time where inflation expectations are not showing any sort of sign of alarm of being elevated or going higher, when the job market is showing a trend toward lower jobs and potentially negative jobs, if you believe ADP?
You know, I just think when you've been above the inflation target for 4 years and people are worried about whether or not you mean it. And by the way, if they wanted to change to a 2 to 3% range, I could see an argument for that. If they wanted to change to 2.5%, I could see an argument for that. But that's not what they've said. They reiterated their 2% target, and there's a cost to not hitting that target. And right now, people are really looking at them and wondering, do they mean it?
But you don't think it'll come down on its own without the Fed holding here?
Might come down a little bit, but it also might go up a little bit. And you're doing risk management at the Fed. And the question is, what is the greater risk? There are definitely employment risks right now. I think most of the slowdown we've seen is on the supply side with less immigration. And there's nothing the Fed can do about that. But there's also risks on the inflation side. And which is the bigger risk? Well, it's the one that you're further off target from. But again, I would also go back to there's a lot of other demand in this economy. The stock market, the fiscal expansion, the data centers. There's a huge amount of demand in this economy. I think we actually have real potential for growth in 2026. I'm not super worried about a recession right now.
The other counter-argument to this is that isn't it easier for them to correct if inflation goes up than for them to correct on the downside if employment takes a turn for the worse?
That gets back to inflation expectations. If they rose, and I agree with you that they look okay right now, but it was very hard-earned getting them down, getting them stable. We've benefited an enormous amount over the last couple of years. That the Fed has really kept its credibility, even in the midst of high inflation, as measured by low inflation expectations. And so you should be willing to pay a price to make sure you're not losing that hard-earned credibility.
You think the long end would be okay if they massage the target, like you say?
Right now, there's no sign that anyone thinks the inflation target has slipped. And if anything, people feel quite good about it. But, we're going to see who they pick for Fed chair. We're going to see how they talk about the inflation mandate. We're going to see how the committee functions as a whole. And I think I have more uncertainty about whether we're going to have 3% inflation over the next decade than is currently priced into the market.
What'd you make of this FT piece that the bond market is warning Treasury about Hassett being too close?
To be honest, I'd rather look at the bond market than to look at quotes from people in the bond market.
It handled the balloon pretty well?
Exactly. So I think the market pricing suggests to me that the bond market is not that worried. I think there is definitely a tail risk. It probably takes more than just one person at the Fed. It takes a couple appointments to move the committee far enough. It's a multi-year thing that could erode the Fed's independence. I am worried about that. But again, I think that's more of a tail risk than the central scenario.
But the central argument there is that there's some concern about Kevin Hassett because he's so close to the president and he has leaned politically in the past. I mean, he's a legit economist, but will he just do what Trump wants when it comes to rate policy?
I am very nervous that he will try to do what Trump wants. I'm not sure about that. He could show up there and become an institutional Fed person, put a different hat on than he's been wearing. but if he keeps the same hat he's been wearing, he will try to do that. There's then the next question of, even if he tried, would he succeed? There's 11 other voters on that committee. Those voters have increasingly shown independence and willing to vote in a different way from the chair. The more he tries to push, if that's what he does, and we don't know, the more he tries to push, the more there'll be pushback from the other members of the committee.
One last question on jobs. We've heard about the threats from the shutdown. We've heard about the threats from, as you say, immigration flow. If AI really does take some wind out of hiring sales, is that anything that the Fed can do anything about?
Not very much. That is really a structural problem of what you can do to help prepare people for jobs. Now, I do not think that has happened to date. I don't think our job problems right now have much, if anything, to do with AI. I'm optimistic that it won't cause them in the future, but I'm definitely not certain. I'm nervous, but that is very much Congress, the president, need to figure out a better set of policies to cope with this transition, not the Fed just cut interest rates.
And one more, because I know you've been inside the White House. There's a report that the Treasury Secretary, Scott Bessent, is in discussion to also lead the National Economic Council if that position opens up. Good idea or bad idea? Or doesn't matter?
Honestly, I don't mind that much. I prefer the way we did economic policy in the administrations I was in, where it was really an economic team. And to have an economic team, you need a fair broker coordinator. That's what the NEC director does. But if you want to abandon the team approach and have one person lead economic policy, I don't think that's so terrible. And frankly, I'd rather have Scott Bessent than a team that included Howard Lutnick, Peter Navarro, and some of the other people that I think are have much more problematic views.
How do you think they're all doing, as far as the economic policy making team in the Trump White House?
I think they have created all sorts of needless uncertainty and in some sense lucked out because other really good things have happened in the economy that largely weren't caused by them and have bailed out from some of the problems they otherwise would have caused.
Okay. Expected that. Jason, thank you very much.
Thank you.
Welcome back. We wanted to dig into some of the retail movers this morning. Dollar General, the biggest gainer right now on the S&P 500. The discount retailer reporting better than expected earnings and lifting its fiscal year guidance. Shares of Dollar Tree also hitting 52-week highs. Look at Costco. It's under pressure despite posting strong same-store sales for November and Q1 last night. PVH shares sharply lower after issuing disappointing fourth-quarter guidance. And then Five Below raising its profit outlook for the third time in its fiscal year, lifted by demand for budget-friendly, trendy goods as U.S. consumer sentiment wanes amid higher prices and a weaker labor market. And the Five Below chart tells you what you need to know about the consumer right now, which is they're looking for deals. And they're looking for newness, which is a word I hate, but the whole industry uses. New, cool products at good values. And that's really what retail is all about. I told you I spoke to the PVH CEO, for instance, about what he's seeing across the landscape. Stefan Larsen, he's trying to do a turnaround of Tommy Hilfiger and Calvin Klein, and there's definitely momentum there, but he called the consumer backdrop uneven by income level, by generation, certainly across geographies. Overall, I think that the quote was overall resilient, but definitely uneven in spots. Yeah, choiceful just means that they're prioritizing.
Yeah, Kramer today on social
hated that word.
Getting exhausted with the word choiceful, but it's hard.
Value
Brands
conscious.
are cyclical, and it's hard to match the cycle of your brand with the cycle of the macro. Both things have to match up at the same time.
And if you're dealing with tariffs, it helps to have pricing pressure in this kind of environment as well, which I'm hearing is just those pricing actions, certainly from apparel, is just starting to come through, because those inventories that they built up are dwindling. Tonight we'll hear from HPE. We'll have the CEO on the show tomorrow, Ulta as well. More on the consumer and the beauty space.
Yeah, wrapping up a busy week. Let's get to the judge who's back at Post 9.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, Meta is a much-needed moment. That stock is surging today on reports of a more measured metaverse effort. We're trading that and the day's other big movers with the investment committee. Joining me for the hour today, Joe Terranova, Stephanie Link, Carrie Firestone, and Malcolm Etheridge. We'll take you to the markets here. A bit of a mixed picture. Russell, Nas, and the S&P are green. The Dow is, for all intents and purposes, flat. We are talking about this much-needed moment, Steph, for Meta. Because the stock's having one of its best days in many months on a report that it is planning deep cuts in its metaverse efforts. So anytime Meta talks about getting a little more fit, the stock takes off. And that's what's happening today.
It's exhausting. But this is what Zuckerberg does. They report a quarter. They increase CapEx massively. They say next year is going to be even more. The stock falls. And then they find an area and they rejigger things and come up with cost cuts.
Oh, but you better get the stock off this price right now, though. You can throw that back up.
What?
No, don't throw that up.
666.
Take that away. Don't show that.
Oh, stop that. Stop that. Anyway, the point being is that the Reality Labs was going to burn $19 billion this year and $24 billion next year. So if you do see 30% cost cuts in Reality Labs, that's another $8 billion for them on the balance sheet. Look, he is going from hardware to AI and data center. It's very, very clear. That's why they're raising CapEx, because they want to be able to continue to grow mid-20s in revenues. At the same time, he's got to keep margins either where they are or expanding, and that's why the cost cuts come. So I still think even wherever it is, 666, whatever, it's down a lot from when they reported. I was buying. It's trading at 18 times forward estimates. It's growing 20% in earnings and 26% in revenues, as I said. And I think margins can stay in the 40% area. So I've been adding, and I will continue to buy if this thing actually pulls back. I mean, it should be up way more than this, in my opinion.
Way more?
Yeah, absolutely.
4% is not enough? Why more on this?
Because it's still down 20% from its highs.
But what is so groundbreaking about this announcement today?
Well, they're getting disciplined. Right? I mean, he's getting a little more disciplined. And at the same time, all this CapEx spend, we are seeing monetization, Scott. We talked about how ad impressions, because of AI, grew 14% in the quarter. Time spent, which is the thing that they need, it grew 5%. It grew 30% in videos. Time spent, that's huge.
I know, but the only number that the market cares about right now is how much he's spending.
No, but the market cares about operating.
Unapologetically so, by the way.
No, but it's leading to growth and monetization. That's my point on the one hand. On the other hand, people got worried about the spend because then what would happen to margins? Now he's cutting costs, and actually you're going to be able to see operating leverage. And you know that I love that term.
I know you do.
And it works.
I'm just saying, I agree with you.
Yeah,
I know you do.
Okay.
Carrie, so the 52-week high on the stock is 796. Yeah. It's at 666, as we showed. What needs to get this stock back to where you want it to go? He was talking about all this spending on the last call. The market hated it. The stock was underperforming most of the other hyperscalers within this most recent period of time.
Exactly.
You could see what the stock has done. Yes, it's had a decent year, yes. But the rollover is rather pronounced.
Sure. So the stock was up too much. I think it got ahead of itself. We, in fact, had sold some. We sold some Meta that we talked about here because it was a real massive overweight for us. So we cut back. Now we have an opportunity, as Steph said, for people who don't own it, who have watched it go up eightfold, to say, all right, this is a company that dominates in certain categories. If you look at Instagram and WhatsApp, where they're only now beginning to monetize, Facebook has continued to perform for them. And if they just have, as Steph said, some discipline, so they don't take all the free cash flow and dump it into chips and data center, then that's what the market wants. It is not too expensive in terms of multiple, and I think it has upside left. But when it gets ahead of itself, that's when you have to be careful. By the way, 666 is the point of the low of the market in March.
Yes, I know. We all remember that. We all remember that. Okay, so, all right, you're making the analogy there, implying that this thing's got only one way to go from here, and that's up into the moon. All right, well, the other big story, obviously, that we've been following as it relates to Meta is the fact that they have hired away Apple's head of user interface design, Alan Dye. That's a big deal, okay? Enough that Mark Zuckerberg, right, this is a big deal. Anytime you're going to take somebody of that ilk from Apple and bring them into your fold, it's a big deal. Of which Zuckerberg says, today we are establishing a new creative studio in Reality Labs, led by this man who spent nearly 20 years leading design at Apple. New AI glasses. So maybe you have, Joe, a bit of product wars. You have... You're going to have some kind of product wars between Apple and Meta and maybe OpenAI because of Johnny Ive and all of that. What do you think?
I think you have a pivot. I think that's what this is. I think Zuckerberg is incredibly competitive. I think he's showing that today. I think in 2021, when he introduced Reality Labs, it probably didn't go as planned, and I think this is an admission of that. I think the consumer hardware possibility exists for this company. And I think Steph was right to do what she did in buying it and to want to buy more, because I think in totality, when you look at the Mag 7, we're going to have this continual rotation between these names based on where the ownership is. And I could tell you that if you think about where ownership is for Meta, it is lower than it was 3 and 6 months ago. The right behavior is happening today. Meta is higher. Where's the capital coming from? In the Mag 7, the place where the market was excited. Apple, Alphabet.
You know where it's coming from?
It's a one-day phenomenon for sure, but that is unfolding.
It's not a one-day phenomenon. As a matter of fact, if you look at JP Morgan's retail radar, retail investors bought, this is last week, okay, in the last week, bought NVIDIA, bought Tesla, bought Amazon, bought Google, bought Microsoft, bought Meta. You know what they sold? The only name out of the group? Apple. Apple was the lone sale. The stock snapped its 7-day win streak. So there is a belief, it appears, among at least that cohort, that Meta had sold down too much. You don't own Meta.
I don't, but I think we're focusing on the second story you got to is probably the more important one, not year of efficiency number 2, because I think
the device wars, like taking this guy from Apple and bringing him over.
I think so. I think if you think about where Johnny Ive said the market is going as it relates to AI, the next AI tool is not going to be a device that's in our pocket. It's not going to be the iPhone. It's going to be something else. Maybe it's in wearables. Maybe it's not. But for Meta, it's important that they figure out how to detach themselves from the Apple App Store, where they have to pay that toll every single time somebody downloads the app, makes a purchase. So if they can put you on their own proprietary device or a less expensive way to get you access to their key apps, that's where the opportunity really is for them to improve their margins. So anything that Meta can be doing, anybody they have to steal from anywhere else to help them design the device that we don't mind wearing on our face or our watch or our wrist or anywhere else, I think that's where the true value is long term for this company.
You want to give me something on that?
No, I think Malcolm's spot on with that. And I think ultimately it is going to be something that is a wearable where the consumer can feel something tangible with all this AI innovation. I think one of the challenges right now, and you hear this from corporations, is the corporations are spending on the AI. How do we really measure what our return is? That's very difficult to do. And I think when you deliver something that's tangible into the hands of the end user, then you have a stronger degree to measure the efficiency.
How do we price per ad is going up 10%. That's monetization on the other parts of their business, right? So that's really measuring the ROI.
Yeah, right. But I'm talking about the universal innovation, not just specific to Meta itself.
How do we feel about Apple here? Given the news I just told you, so retail's buying a lot of everything else. They're actually selling Apple. Relative strength, RSI on Wednesday hit 75, its highest level of the year. Over 70, Josh talks about this all the time. Over 70 is considered overbought. Jonathan Krinsky weighs in, says Newton's law poised for a drop. Have we come in this name too far based on not much?
So Apple plays a role. It's a seesaw. They are not considered the same as the hyperscalers who are spending these hundreds of billions of dollars on chips for data centers. They are considered different.
It's the
so
safety
we've
trade.
had this period that now maybe has passed where they got credit for containing themselves in terms of self-manufacture, self-design, chips that weren't as advanced. They weren't out there making all of these circular deals. And that carried the stock up 15%.
Give me a 6-month on that, guys, please, so I can see it as we're talking about it. Let's put it back up.
Yeah.
Because I asked you the question, okay.
It's been a great stock. It's been a great stock.
Great stock since August.
I asked you the question, the stock's had a huge run based on what I said was not much. So the upgrade cycle is finally taking hold in the 17 that the stock is up that much. They're not spending as much as some of the other hyperscalers, so the stock is up that much.
Yeah.
Do you feel like that 6-month move of 39, almost 40% is a justified move?
I think the market tells us what's justified. I think the market says.
What do you think that's based on? What is, in your mind, what's that based? I'm not saying it's not based on anything, but I think it's interesting the stock has moved that much when fundamentally you haven't gotten that much.
So it's a little ahead of itself, probably not much ahead of itself. And it can take a rest.
It was a massive laggard, though.
Yeah,
it was a massive laggard.
That's right.
It's only up 12% on the year.
Yes, that's right.
Despite that big move that we've seen since
But
August.
I think Carrie said it perfectly. It's the safety trade, basically, right? So we sold out of a lot of the names that had run up since Liberation Day, April 9 lows in the summer. A lot of the tech names that made up the Mag 7 got sold off. Apple is what you bought as the safety trade because those dollars have to go somewhere. Now you're up 35+% since then. You have to do something, trim that position and buy the things that have sold off.
I was saying, in other words, you better at this point of the story, you better get AI right now. Like, the stock has run up, anticipating that you're going to get it right. You better get it right.
Okay, so this all started on August 6th when Tim Cook went to the White House. That is when we began to reverse the skepticism, as you identified it, which is accurate, that existed in Apple. That's when I began to take the position that I took. Now, I sold out of my personal position last week because I do think we have reached a point where the exuberance has gone a little bit too far. I think the question in front of you with Apple is, since August 6th, what has happened? You had the visit with Tim Cook and the president in the Oval Office. You had the rebuilding of positions.
So the golden iPad is worth 38% in the stock?
No, but what it incentivized those that were sitting outside looking in, saying we're not going to own the name. They came in once again. And then you add upon that building of momentum in the stock. The 17 comes out. The uptake looks a lot better. It looks like the recovery in China is taking hold. And I think here you are at 280. Here, it's better than it was. It's better than it was over the previous years. Here you are at 280.
Better than they were the previous years?
So,
what's their record?
So don't go after my Giants. So if now you're sitting here at 280, and I think the ultimate question you ask yourself, and I'm sorry, I don't know the answer to this. I'm trying to figure out, is success in Apple Intelligence priced in or not? And I think that's the ultimate answer.
Unequivocally, no. How could you even ask yourself that question?
So I have asked others that question.
How could that be in the stock?
I have asked others that question who have sat on this desk, and they have said, yes, it is.
You're telling me, who have you asked that, and on this show that said Apple their whole AI strategy is in the stock?
There have been individuals, I think Steve might have said that to me.
I don't think so.
I think Jimmy said that to me.
No, I don't think so. Malcolm?
You don't think they said that to me? You think I'm making that up?
Yeah.
Really? Come on. That's insulting.
I can't imagine.
That's insulting.
I can't imagine that somebody on this program said that Apple's
Jimmy, text me if I didn't ask you.
Apple's AI effort, whatever they're going to come up with from AI, is in the stock.
I asked Jimmy during the commercial break last week, do you think Apple Intelligence is in the stock?
Malcolm?
I don't think it's in the stock.
Okay.
I'm answering your question directly.
Thank you, Malcolm.
I think that the reason it's run up has a lot more to do with market mechanics than anything else, right? We talked about in
Which
August,
I just said.
In August, when I said, hey, I'm buying more Apple, and Joe followed me into that trade. I'm kidding. He didn't say that directly. But I saw the opportunity because, for one thing, it was underowned, right? We talked about that. Fund managers had to get into it. Mm-hmm. It's the second largest name in the S&P 500. How could you not own it? And they were afraid of being punished.
What's interesting? According to Bank of America, growth funds, their largest underweight positions right now, Apple, NVIDIA, Tesla, Berkshire Hathaway. What does that say, if anything?
Well, a growth manager is going to look at the revenue growth, which has been flat to down over the last several years in Apple, and that's going to be one of the impediments to owning it, for sure.
I just think there's no AI story right now for Apple. Like, we keep asking, is it baked into the story? There is no.
That's my whole point. There is no AI story yet.
I asked the question. Why are you arguing with me?
How could it be in the stock?
I said, I don't know. I said, I don't know.
And
then I asked the question.
It doesn't even exist at the company.
But there's potential for one. There's potential.
I mean, they've got the install base. They've got the people who are. Think about it. The Google phone products have been outperforming everything that Apple can do for the last 2 years. They've even got commercials out now taking direct shots at iPhone owners, and not enough people are switching to any other device. That tells you how loyal the base is, and it tells you how big the opportunity is whenever they finally deliver.
Can we talk about another AI story that I feel not enough people are talking about? Another AI story that not enough people are talking about. Okay? Walmart. Hello?
Yeah.
Why do I say that? Does that sound ridiculous? The stock closed above $900 billion in market cap for the first time ever. They have You can take issue with this statement, whatever you want to do. I feel like they've leaned more heavily into AI than any other retail on the planet. Okay? Supply chain for its super agent, that's a strategy to support various parts of the business. For its partnership with OpenAI to help improve their service, it's invested heavily in data centers, robotics, etc. I don't think the stock, back it out a little bit more, guys, so you can show the run that the stock has had. You own the stock. I don't think you get the move, more than that, please. I don't think you get the move that the stock has had to get to 900 billion in market cap without their AI play. People talk about it as we were doing our CFO council yesterday down in DC, and Glenn Hutchins I interviewed Glenn Hutchins, and he mentioned Walmart when he was talking about AI, companies that have really leaned in and done things right.
Yes, and for sure, over the last several months, those that have paid attention,
like you,
I have said that Walmart is a clear leader in the usage of AI. In fact, they have a relationship with ChatGPT.
Yes, they do. That's what I said, the partnership with OpenAI.
Agentic AI, which I have mentioned on the show previously. I know you remember that for sure. Anyway, we bought the stock in October of 2024 at 81. They've captured market share. They've satisfied the desire of the White House, which scolded them and said, don't you dare pass the tariffs through. They absorbed the cost of the tariffs. And they've established themselves really distinctly from Costco, which has been somewhat surprising. I think Costco is behind, to your point, on the usage. They're there, but they're not there to the degree that I believe Walmart is. Now, the argument that some people are going to make, and full disclosure, I don't look at valuation. That's not my thing. But it is a rich valuation based on historical metrics for both Costco and Walmart. So maybe that's the impediment for future appreciation, but we're certainly going to stay with it based on what we're seeing with the momentum and quality factors.
Maybe you got to pay up. Maybe you got to pay up. I mean, the stock, the 52-week high in this name is 114.89. It's barely off of that right now. Steph, you want to weigh in on that? I mean, I feel like they have differentiated themselves in other ways than AI, but they've leaned so heavily into it that I just don't think that it's an accident that they've done that and the stock looks like that.
Well, they're doing it, and they're also taking massive share.
2 years, 121%.
And from the likes of Target, from the likes of the dollar stores. They're taking share across the board on the retail front, and that's because AI is helping them. But the key for Walmart and the key for retail, in my mind, will always be traffic. Can they get people in the stores? And once they get people in the stores, they can then target those people using AI to help sell merchandise. And that's why transactions have been above trend as well. So congratulations to you for owning it. I've always thought it was just way too expensive. And I can't compare it to Target anymore. Target's lost their way. But I mean, 11 times for Target, 35 times for Walmart. I just can't get there.
Yeah, one point I would make on Walmart, and I'm glad, although sorry for Target, if you figure out how to use AI on your website, which Walmart has done incredibly well. And I'm not a big Walmart shopper, but I do use the website, and I like it. It's really easy to use, and it remembers what I looked at before, and it helps you get places in a way that's...
And Walmart Plus has also been, is all part of that.
It's really, look for beach towels. I mean, it's incredible what they help you with.
Okay. Let's talk about some other names that are coming, that are really important. Next week, Oracle. I bring it up today because we've been talking a lot about the CDS. Okay, we're going to stay on this AI theme because there's so many stories on it today that we have no choice. Their CDS hit a 16-year high yesterday. Stock was reiterated buy today at TD Cowen. $400 is the price target ahead of next week. The target did get cut to 375 from 415 at Citi. They still maintain their buy. They say concerns around the debt health are overstated. Nonetheless, the CDS continues to move up and to the right. Malcolm's temperature keeps moving up and to the right every time he looks at this stock and the CDS, Malcolm.
Yeah, this is one that's just really tough to tell anybody to buy additional shares of at this point. Like, the story today is Morgan Stanley looking to offload some of its data center related debt. I have to imagine they're not the only ones. I have to imagine a lot of the larger banks, as well as the BDCs and whoever else has created these special purpose vehicles, like, they're all trying to find ways to move this hot potato to someone else. And that doesn't say a lot of good for Oracle, right? If we think about all the spending, all the borrowing to build that has happened so far this year, about a third of that debt belongs to Oracle specifically, and it's also tied to their $300 billion commitment from OpenAI, which a lot of people in the market obviously have questions about now. So it's a tough story to get excited about. I own shares. I will hold them for now to see what happens, but it's tough to recommend it.
All right, let's throw up Snowflake, please. Because they reported and the stock is lower. It's been a market darling. There's no question about that. Steph, you know that as well as anybody. The stock's had an incredible move, up better than 50%. It's down 11 though. What's this all about?
It's all about guidance, because they guided for the next quarter to be operating margin guidance for 7% and for 26, 9%. So what did we talk about earlier? If you have the revenue growth, which this company does, they just grew total product revenue growth of 29%, but you have disappointing margins, you don't get the operating leverage like we thought. Consumption trends are very volatile, though, and so if people are going to start to pick at the top line, the product revenue growth of 29% being down from 32% sequentially, I think that's a dangerous move. I'm more concerned about the margin story, but I just think that this is a blip. I think they have a chance, very much so, over the long term to get to 15% operating margins. So I am going to be adding. I actually trimmed a little bit a couple of weeks ago, just because it had such a nice run.
You don't think it's gotten a little ahead of itself, though?
No, I don't. No, I don't. Their RPOs are up 37%. Their net retention up 125%. Customer base of 20%. These are huge, huge numbers, Scott. So it's done a lot of what I thought it would do, but I still think that there's more to go. I think you're in the early innings, and I just think that this is a silly overreaction. I do think it's going to recover, especially because the growth is there, the momentum is there.
Nobody wants a sales force today. For those who are waiting for something to materialize on the market to appreciate the stock a little bit better than it has, let's throw that one up. So it's up 3%. They have their earnings. They issued better than expected revenue guidance. Mark Benioff, the CEO, is going to be with Jim tonight on Mad Money. It's an exclusive, but the stock chart year to date tells the story. What's going on here? Why don't I have any takers? Why don't I have any buy on the dippers? Why don't I have any? This is going to be what Snowflake has been doing.
So software is having such a strong relative underperformance to semis. And I think when you're looking at the technology space, at least for what we are doing, there's opportunity, whether it's the KLA Corps, the Lam Research, the Applied Material, and then Micron and NVIDIA. So software has underperformed for us, and there's no momentum building. We have a variety of different names that are struggling right now, like Workday. And as we continue to move forward, you're not going to build a position for what we do in something that looks like it continues to deteriorate.
I think it's a different story. I think there's a lot of reporting that's been done in the last few days about the slow uptake from enterprise clients to buy these AI tools from Microsoft, Salesforce, others. And I think that's what's really weighing on the stock. And the story is in their earnings. $135 million, I think, was the number that Agentforce generated in the last quarter versus like $10 billion worth of revenue altogether. So that's less than 1.5% is the revenue being generated by Agentforce, which is the flagship, this is our way into the AI conversation piece. I know the Data 360 is a bigger piece of the mix now, but like that's the thing Benioff's been hanging his hat on, and it's just not, the uptake just isn't really there yet.
All right, 3 o'clock Eastern Time, closing bell. Dan Greenhouse is going to be with me today. Mohammed El-Arian, Brian Levitch, Sonali Basak, Alex Kantrowitz is going to be with us, and so is Steve Kovac. We're going to talk about those AI device wars. They're definitely heating up. Let's do final trades. Carrie, what do you got?
I like American Express. We saw how strong retail was over the Thanksgiving holiday, and I think that's a good augur for how we're going to see growth through the rest of the year. Big membership growth, the stock's attractively priced.
Malcolm.
Rocket Mortgage, speaking of the home builders, the next cut should be impactful for them too.
The Linkster, what's with SLB? Is that a new, you added that?
Yes, we talked about it yesterday on your show.
Okay.
So at least it was on your show. Yes, new position. It's
Thank you.
trading at 14 times forward estimates.
I wasn't here. I'm just
I
saying.
know,
just
but I
make
wanted
sure
to get it
everybody knows
out.
that. Like,
I wanted to get it out.
you're
on
like,
your
don't you remember
show.
we talked about it yesterday? I was like,
I
no,
know.
I don't actually.
Well, okay, so there you go.
SLB.
So no, I actually don't own any other energy.
Okay.
This is one I like.
Joe T.
Parker Hannafin.
All right, we good?
We good.
All right, great. I'll see you in the closing bell.
Talk about bonds. And let's talk about Japan, because if you've been listening to Rick Santelli for the last few weeks, and I hope you have, you know he has been all over one big story in the super spike in borrowing costs in Japan. Bond yields there hitting their highest levels since 2007. And that could also be a big tell on our markets as well. Rick Santelli is here now on the Bond Report to tell you why.
Absolutely. You know, we always have to talk about global rates. They're a big star in this kind of play that we're looking at globally. But let's start with 8:30 Eastern this morning. Initial jobless claims, 191,000. Basically, the least amount in 39 months, going to September of 2022. Now, many say accurately, well, we had a holiday, Thanksgiving. Things always get distorted when you have one less work day. But there's something called seasonal adjustments. And that process is supposed to take care of a lot of different issues like that and a lot of different numbers that the Bureau of Labor Statistics puts out. Just consider the cycle of school teachers in the summer and the winter. Like, all these things are supposed to be seasonally adjusted. So if it's a problem this time, maybe it's a problem with all seasonal adjustments, something to think about. But nonetheless, that move had ramifications in all markets. Look at a 12-hour chart of 2-year and 10-year. You could clearly see at 8:30 Eastern, both of them spiked higher. And you want to pay attention to how markets behave on key data points. Look at the dollar index. Right in the middle is that spike. Now, granted, it got a little muddy, but look where it's hovering now, pretty much right at or higher than that spike at 8:30 Eastern. And finally, back to the topic that Sully talked about. Okay, our low yield close of the year was October 22nd. Let's pick that date and do 3 charts. Okay, now what I want you to look at is the one that's up 28 basis points since then. That's the Japanese government bond. That's the number one, the one that goes way up, and it continues to go up almost on a daily basis. Number 2, Boons, up 23 basis points since we made our low yield close of the year. And then finally, in last place, is the U.S. 10-year, up about 14 basis points. The point here is that whether it's issuance, fiscal issues, or just a general slowing, lackluster economy, all these reasons of rates going up aren't the reasons that investors used to like in the old days when your economy's all juiced up and rates go up. This is for more negative consequences, especially in Europe and Asia. Sully, back to you.
I love it. Was like a global lesson in the bond market. Rick, we love it. Thank you.
Hey, everybody. Welcome to Blue Cloud Trading. I'm George. It is Thursday, December 4th, 5:14 p.m. as I'm recording this video. We can see how the markets did today. Dow was down 0.07%, NASDAQ up 0.22%, S&P 500 up 0.11%, and the clear winner here today was the Russell up 0.88%. In this video, folks, here's what we're going to do. We're going to cover the following. So we just saw some clips from the halftime report and a couple of other shows too on CNBC. And we're going to look at the index ETFs, like the Russell, the SPY, the Qs. We're going to look at about 12 stocks that they covered on the show. You can see the list right here. We'll also take a look at some of the Mag 7 stocks like Apple, Tesla, Meta, Microsoft, Amazon. We'll look at sectors to find out what ETFs, including gold, energy, you can see copper, for example, some of the ETFs that are doing really well right now. And we'll even take a look at one of the other member requests here, APP is the ticker symbol. So let's see. Here's what we're going to do. We're going to first start off with just a quick summary. What's going on in the market today? S&P 500 nears record as small caps surge. Traders await key inflation data. S&P 500 edged higher, closing near all-time highs. Russell 2000 small cap index hit a record close, outperforming the broader markets. Jobless claims fell to a 3-year low, surprising to the upside. Mixed jobs data reinforced expectations for Fed rate cuts ahead of next week's meeting. Dollar General rallied. SoFi jumped after announcing a $1.5 billion share sales plans. Kroger declined, and Snowflake also tumbled on weak guidance. Traders focused on Friday's PCE inflation data for further market direction tomorrow. So let's look at the heat map and see how the individual stocks performed today. NVIDIA was up 2.11, Oracle was up 3.18, Tesla was up 1.74, Meta up 3.43. Amazon and Google were down slightly here. Amazon was down 1.41, Apple down 1.21. The healthcare stocks were down a little bit today. Most of the utilities were down. And financials did pretty well, except for Visa and MasterCard. Let's look at the groups. And actually, one more thing I want to look at is the ETFs here real quick, so we can get a sense of what's happening. You can see some of the country ETFs like Japan, Brazil, India, Latin America, right? Doing pretty good. URA from the energy sector is a ticker symbol for that did pretty well. Let's look at URA real quick. That's the uranium ETF, but it's still inside the cloud right now, so it has not broken through, but it's looking pretty positive. It's up 9.85% this week. Let's start off with the index ETFs now, and folks, if you're unfamiliar with this indicator that I've got popped up here, it's called the Ichimoku. The Ichimoku indicator originated in Japan, incepted in the late 1930s, okay, and published in the late 1960s, and now it's been brought to here to the United States sometime in the 80s, I believe, is when it was starting to become more adopted by a lot of financial institutions. And it might look very complex at first glance, right? Because there are so many lines going on here. But I'm just going to really clearly explain what each one does, and then you'll have a better sense of what's going on here. So the green line is the 9 period. It's the midpoint of the last 9 periods. It's plotted right there. The red line is the midpoint of the last 26 periods. They call this one the Tenkan-sen. This is called the Kijun-sen. Then you've got the cloud itself, the Ichimoku cloud, which is what you see right here. That's comprised of 2 lines. It's called the Senku Span A, which is the midpoint of these 2 moving averages projected 26 periods into the future. And then you've got the Senku Span B, which is the midpoint of the last 52 periods, in this case 52 weeks, projected, okay, 26 periods into the future, not under the candle like it is in these instances. Very unique. And then you've got the white line there, the laggard or lagging line called Chiku Span in Japanese. So Chiku Span is projected 26 periods into the past. We want to see what that white line is. It's the closing price, 26 periods into the past. Where is that in relation to the candle 26 periods ago? If it happens to be above, that's very bullish. And what we're essentially looking for is for price to be above all the moving averages. Okay, so we want these price here, the candlesticks, to be above the Tenkan-sen, the Kijun-sen, the Ichimoku cloud. When you have all those elements collectively, you've got a very strong trend, right? And you also want the green line to be above the red line, and you want the Senku Span A to be above the Senku Span B, like it is in this case. So all of that is telling us that we've got a strong, very strong uptrend here in the Russell 2000 on the weekly chart. In fact, we broke through this high here. That was, you can see that happened sometime in September of 2025. It pulled back, found some support at the 26 period, and then jumped. And now it's going to be retesting these areas here. So overall, it looks pretty positive. Here's the daily chart for you. And let's throw some lines on. There's a resistance line of 252.77. We're almost there. So if we can break through that 252.77 level and hold up above that level, I think the Russell will continue moving to the upside. In fact, it's the only one of the index ETFs here that got a blue flag today. And the reason it got a blue flag is because all the elements look very positive, very strong on both the weekly and the daily time frame. So that's that's how I determine the strength, and I'm looking for strength on both time frames. The reason I'm looking for that is because, you want to get a bigger long-term picture of where the stock is. The daily can be a little bit more active. You can see it moves that around quite a bit, where the Russell, each one of these candles represents one day, where the weekly chart, for example, represents 1 week. So you can get a better picture of what's happening. So I like the Russell. Let's look at the S&P 500. SPY doesn't look terrible either. We did, in fact, break above this high, it looks like here. Okay, just barely, but then it closed under it. And we did break through that trend line right there, too. So that's also bullish. But we haven't taken out this high. We haven't taken out that high either. And we still have a lower low here from the prior one. So, those numbers that we're going to get tomorrow, it's going to be very important to find out what happens. That's why I think the indices didn't really move much today. It's, they're just basically, it's a wait and see approach to see how the report comes out. And then we'll see price either, spike up or drop. So there's the S&P 500 daily chart. Here's the weekly chart. Still a very strong uptrend. Here's the Qs on the weekly, very bullish, and on the daily chart as well. But again, doesn't get a blue flag because some of the elements are incorrect here. Like the single span A has crossed under the single span B, the light colored blue line there. So we have they call that a bearish cloud. All right, but price is still above the cloud, and price is still above the moving averages. So we've got a mixed picture here. And also, we haven't taken out this high, as you can see right there. Okay, so we need to do that as well. There's some things that need to be occur before we're back in a very strong trend again. Here's another situation that we have here with the Dow Jones. We got a lower low from the prior one, and we haven't taken out this high yet. But overall, we got the majority of the things looking good. Price is still above the moving averages in the cloud, but the Tengen-sen is under Kijun-sen. The faster moving average, the 9, is under the 26. The VIX, which represents volatility in the markets, is still dropping down 1.87%. Okay, which is positive. We want to see that volatility coming out of the markets. If tomorrow those numbers come out negative and Wall Street doesn't like it, you'll probably see this spike upwards. FEZ, the Eurostoxx 50. We've got ourselves a spinning top right now. So that's a negative candle. After a move up, there's a higher probability that this will pull back. But I think, again, I think the news are going to be the determining factor here. You can see how the candlesticks can give us some insight. Like, for example, over here we had a bearish engulfing pattern. And after that big expansion right there, it came up to that 64.35 level right there. And we had a bearish engulfing pattern and it dropped, right? And now we've had this big expansion in the Eurostoxx. We've got ourselves our first reversal candle. That's called a spinning top. Here is a sample of what it looks like. A bearish spinning top, a single candle pattern. Okay, so if you guys like this pattern reference sheet that I have, it's very useful to help you identify the trend and get more insights on what to do. And you can find that on my Twitter page or x.com page. This is my handle, @BlueCloudTrader, and just select highlights. It's the middle tab here. It will bring you to this page here, and you just scroll down and you'll find it right there. There's also a pattern cheat sheet here. So these are really useful too. Okay, so let's get back into this. So that's, on the weekly chart, FEZ still looks good, but it's still under this level of 64.36. All right, so let's get to the CNBC stocks. The stocks talked about on the show. I've got the strongest ones up here highlighted. That's going to be 6 out of 12 that are looking pretty bullish. Like American Express, for example. On the weekly chart, you can see here, we've got ourselves a very bullish cloud pattern where price is above all of the elements here, all of the different moving averages, and on the daily chart as well. And we also had a recent bullish crossover here with the faster moving average crossed above. Chiku span is above price. Everything looks pretty good. We will find some resistance at 377.23. That's about 1.7% away. That's the prior high. We got 5 below. This one looks pretty good today, up 3.23%. It looks like it's stalling, however, at this high. Let's find out what that level is exactly. 168.98. Yeah, it's at 168.42 is where we closed. So we closed right under that level. We did have some nice high volume right there. So that's positive. The directional movement index is also looking pretty good here. The positive, the positive DI is still above the negative DI, and the ADX is moving up. The ADX is the white line. If that's moving up, that's telling us that the momentum is increasing to the upside. And when the green line is above the red line, that's a very bullish scenario. We don't want to see the ADX moving up, like over here, where the red line is above the green line. You can see how it pulled back after that. And you can see here the beginning stages of where price, again, the green line crosses the red line right there, and it led to a pretty nice big move for the market. As long as that green line was above the red line, we had a nice move here in 5 below. Okay, INTC, Intel. Intel got a blue flag today. So the Tenkan and the Kijun are literally at the exact same level, 38.46. Okay, and so it's crossing it. Okay, the one thing I would say that I didn't catch when I was doing the analysis earlier is the Chiku span, the white line. It has been above the candles here. Right now, it's inside the candle. It's not below it. It's not above it. It's within the candle. So it's basically also stalling at this 40.57 level. So that $40.57 level needs to be, let's see here. I think it's based on some prior levels. This might be an older trend line. Let me get rid of that. I think the next level where it's going to probably find support is right here at the Tenkan and Kijun. It could potentially drop another 5% based on this pattern that we've got going on here. But overall, I like Intel right now because here's a weekly chart, guys. Check out the weekly. We got above the 200-day. We have a bullish cloud that's just formed here. We're above the Tenkan and Kijun. The only thing is, again, it's Thursday and it's forming a shooting star type candle. So that's a little bit concerning. We might, but if we get good numbers tomorrow and we start seeing the technology semiconductors doing well, Intel will also benefit. How about PH, which is Parker Hannifin Corporation? This one here on the daily chart is still very in a strong uptrend, and on the weekly. So I like Parker Hannifin Corporation. It's in the industrial sector, which was very strong today. In fact, I forgot to show you guys how strong it was. Let me just go back to the groups here and zoom in. You can see that industrials were the top performer today, up 0.71%, and consumer defensives were down 0.53%. That was the worst performer. All right, let's get back. So we got RKT, which is Rocket Companies. This one on the weekly chart. This was Josh Brown's final trade back on September 11th. Let's see, where was that? It was around this time here. It dropped. It's now coming back to that level. Here's the daily chart. Okay, so it is currently above the cloud. We've got a bullish crossover here on the cloud. That's important. And on the weekly chart, we've got everything also working out here, but we've got a shooting star forming. So that's a little bit concerning. Walmart, I love this chart right here because it broke through the 109.57. Okay, this prior high right here. Let me just circle it for you. Okay, it created this nice little cup type handle pattern. Whoops. Let's look at this on the daily chart. You'll see it even more clearly. So there's the cup. There's a little handle right there. It was kind of formed, and it broke through that 109.57. It's now moving up quite a bit. That cup and handle pattern can be found right here. You can see it. Okay, that's a cup and handle pattern right there. So that is bullish. I like what I'm seeing with Walmart. Now, has it gotten a bit extended? Absolutely. Look at all the candles here. Multiple candles. This is a rare occasion, a rare instance, and it's most likely to pull back. And if it does, that will give us a better opportunity to get into this. But right now, I would not be adding here. It's too far away from the moving averages. It's taken off, and you're taking a big chance there, in my opinion. The rest of these stocks are not looking good. AMD, for example, inside the cloud. When I say not looking good, there's something off technically that doesn't, they're not as strong as the ones above here. So AMD is obviously still in a decline here. I'd stay out of AMD for the time being. CRM, yes, it's moving up, but it's still under the cloud. It's also, yesterday it actually had their earnings announcement on December 3rd, and you can see it gapped up and moved up 3.66% today. And you'll also notice the volume here increasing. So yeah, it's definitely certainly more in favor right now. It also took out this high, it looks like temporarily. Let me see. Just barely. Let me see. What is that high? We got to find out the exact dollar amount. 248.43. We stayed under it. So we did not take out the 248.43 level. But we still have a lower low here. And so we have not taken out this high, and we're still stuck under the cloud. And that declining 200-day moving average is just about 4.6% away from where we are. So there's a daily chart. We're still in an embedded decline here on the weekly. Okay, so not something I would be jumping into personally. SLB Limited in a decline, but it broke into the cloud. That's a bullish sign. Certainly wouldn't be jumping in here quite yet, though. And here's a daily chart. The daily chart looks bullish, right? Snowflake. We've got ourselves a big gap down here. 11.41% after the earnings. Okay, that happened after hours. I talked about it yesterday and showed you guys what it looked like after the market closed. We saw the Snowflake just drop, and then it continued dropping. From the opening price this morning, it dropped another 3.6% or so. Here's the weekly chart. Still, it's finding support at the Kijinsen, so that's a good sign. But it is weak right now based on those earnings. TSM is inside the cloud. Nothing to do here quite yet. Chiku Spin is still underpriced, and we have a bearish cloud. US dollar. Let's look at the UUP ETF. It's currently under the moving averages here, but we got ourselves a bullish engulfing pattern that formed today. Here's the weekly chart. We're still under the cloud and under the 200. All right. So that's something also to keep in mind. All right, let's go to the Mag 7 stocks. Not all of them, but here's a few. Apple, okay, is the only one that has a blue flag because it looks great here on the weekly chart, and on the daily chart, it is still holding up above the moving averages, even though it pulled it back 1.21%. It might find some support. In fact, that little wick that you see at the bottom of the candle there represents buying that happened in probably the last hour of the day. If I switch it to a 5-minute, we can probably see that. So there you have it. Okay, around 2:30 or so. Yeah, 2:30, and it started to move up approximately 0.76%. But it re-entered the cloud on the 5-minute chart. Here's the 30-minute. You can see popped above the Tenkan-sen, but it did have a down day. All right, Tesla up 1.74%. On the daily chart, it's currently still continuing up. To probably, like we still have a bearish cloud here, and Tenkan-sen is still under Kijinsen, so we don't have all the elements there for Tesla. Meta is still under the Ichimoku cloud, and in fact, it reached that 200. And like I've said before, whenever price comes to a level of resistance like the 200, it's very difficult for it to break through. Very difficult. So it actually continued. It basically opened up above temporarily, and then spent the rest of the day declining. Again, we can see all of that on a 5-minute chart. And that's why these candles tell us so much. When just looking at a candle like this tells me, okay, the opening price is right there. The closing price is right there. That's what makes it a red candle. In this case, the opening price was at the bottom, and the closing price at 4 p.m. is the top, right? So if I switch it again to a 5-minute chart, you can see that it gapped up to this level, 676, and then it dropped. And then it basically, stabilized, but it continued dropping. It still was up 3.43% because of the gap up, okay? Because it, in fact, gapped up right there. Okay, Microsoft, bouncing off the 200-day moving average. I like this one right now because it is bouncing off the 200, got back above Tenkan-sen. Would I be adding position here? No, because it still is technically under the cloud. So again, I like to trade based on the rules that I've established. And the other positive I'm seeing here is that it did in fact break through that trend line right there that you see. So if you take that high and this high right here, extend that out, we're currently above it. How about Amazon? Amazon, although it is above the cloud, it's, in between the two moving averages, so I'd hold off on this one too. All right, let's keep going. I'm just going to go over the strongest sectors here. We've got XBI, biotech, looking good, up 1.17%. There's the daily chart. Here's the weekly. Those are the blue flagged ones. Energy looks good. Here's the weekly chart, breaking through that trend line. Ooh, that's good. That's good to see. So that's important. Again, you can see right there, touched there, touched there, touched right there, and retreated, touched there and there, was unable to break through it. But today, it did break through. The question is, will it just, we have to wait until tomorrow, right? Because this is a weekly chart you're looking at right now. Will the price close above that trend line or below it? So tomorrow we'll have a better sense of that around 3 o'clock or so. Here's the daily chart. So you can see it even more clearly. It closed above that level on the daily. Will it also close above that level on the weekly, though? That's the question. Otherwise, I like it. Energy. GDXJ pulled back, found some support at that 105.24 level that I drew back on October 13th. So you can see that right there. October 13th created. So, yeah, I think this has a potential to also continue moving back up. Here's the weekly chart. It's kind of stuck under that 112.45 level. I'd like to see it break above that level for more confirmation. We got copper X, the COPX. Here's the weekly chart breaking above that 66.20. It's looking very bullish for copper. Higher volume this week than the prior one. Almost twice the volume right there. And then if you look at the daily chart, 2 days in a row now we're holding up above that 66.20. Will we also hold above it tomorrow? That's the question. I think we will. GLD gold looks good, up 0.06%, still holding up. We got ourselves a nice little doji type candle, but it's bullish. You can see that just barely right there. That's the daily chart. Here's the weekly chart, still holding up above Tenkan-sen. So it's not a bad sector to be in, or investment to be in. Silver, here's the weekly chart. Down 2.47% today, but we got ourselves a reversal candle that's forming, but we are above the moving averages and the cloud. Here's the daily chart. You can see that little pullback here. So it gapped down, dropped 2.47%. It could certainly pull back a little bit more, all the way down to 49.22, and then maybe we'll get a bounce once we reach these levels, because it will also coincide with the 9-period moving average. All right, so no reason to get into the rest of these. I mean, let me see. I think I want to take a look at SMH real quick, because that's semiconductors. We got a bearish Harami pattern. That's a bearish pattern right there. Again, the news tomorrow will help us determine what's going to happen. All this tells us is there's a higher probability that it could potentially pull back based on the candle today. But today, again, there wasn't a lot of interest in taking too many positions. And then let's see what else. Anything else? Oh yeah, the industrials were up today, so we can look at that. XLI. The cloud is still bearish, but it's looking more and more positive. In fact, if you just look at this, we've got a higher low now from the prior one, and we also broke this. We actually broke it yesterday. So we've got ourselves a nice upward channel that's basically built up here as a result. So you can draw, all you need for an uptrend is a higher low from the prior one and a higher high. So that's what we've got here. Higher high from the prior one. All right, and then we'll look at Apple, APP, which is Apple Oven Corporation. Here's the weekly chart. Very bullish, up 3.26%. Today, this week, it's looking very bullish, right? You can see that. I like what I'm seeing here on the weekly chart. On the daily chart, look at that profit margin, 51.28%. Here's the daily chart. We've had multiple days where it's been moving up. We are far away from the moving averages. This thing could pull back at any time to just take a breather. Maybe it will potentially build a base, but I wouldn't be adding here. It's just too far away from the moving averages, in my opinion. But we did break above this high, which is also very bullish. ADX is still moving up. That means that the momentum is still to the upside, at least for the time being. So I like that. And that's going to do it for this video, guys. If you liked what you just saw, don't forget to like, subscribe, and remember that you can also get access to the members-only videos, these right here, by becoming a member. You can subscribe for free and hit that notification bell so you get the notifications when I pop a new video. All right, but if you want to get additional content that I make only for members, click the join button. Hit that little join button right next to it, And you would need to select the Blue Cloud Trader level, membership level, or Blue Cloud Legend. The difference is under this level, you get access to those exclusive member-only videos. Under Blue Cloud Legend level membership, you'll get those member-only videos plus daily trade updates, which I post every day. It'll be right next to the posts section. You'll see membership tab. You click on that, and you'll be able to see the daily trades that I've placed. All right, and that's going to do it for this video, guys. Thanks. And if you like the, one more thing. If you like the software that I'm using, it's called TC2000. How do you get access to the $25 coupon that I have? It's an affiliate coupon, folks. You go here, right next at the homepage here. Click on nine more links. Find out a little bit about my channel. Scroll down. Here's the link. $25 coupon for TC2000. There's a whole number of a list of other links, including that Twitter page that I mentioned earlier. You got property management software, NordVPN for three free months if you're looking for a really good VPN. Also, you should check out wise.com as well. If you're interested in like holding other currencies, you can do that with wise.com. You can have an account with euros and all kinds of currencies, and they have really good rates. You can also transfer money overseas very inexpensively compared to like doing it through a bank. It's way more cost effective using wise.com. Use that link there, and I think what it does is it gives you additional, it says here you can always transfer more. We waive the fee on the first $600 US. So that's pretty cool. So you can transfer money up to $600 for free without any fees overseas. Let's see what else. And that's it, guys. Thanks for watching. I appreciate you. Have a great rest of the evening or day wherever you are, and I'll catch you all in the next one.